Hey guys, so another green day. That's 7 in a row now. So we've put a little bit of a streak together. We had a continual losing streak in May. What I mean by that is we lost money in May. In the long term, we actually made money in May, profit, and I'll do a May recap a little bit later so that we can talk about that. But we trade profit and loss, or trade profit, we actually made a little bit of money. We were green on May, but after transaction fees, commissions, charges, etc., we actually lost money in May. So it's nice to be able to put a streak of green days. Granted, it's only the second of the month, but to start the month green is a big thing. We took 5 trades today. Two losses. One's a significant loss, one a very small one, and then 3 winners. One a very small one, and 2 very good ones. So yeah, I'll go into those in just a second and talk you through them. But in the meantime, remember to hit the thumbs up button. It really helps with the algorithm and it helps me grow the channel. And by all means, recommend the channel to your friends and family and neighbors. And I just want as many followers as possible. So hit the thumbs up button and subscribe to the channel. Don't forget to subscribe. That really helps out as well. I do go live every single day, every single trading day. I don't go live at the weekends, and occasionally I might post videos at the weekend. So whenever there's a new video posted or whenever I'm going live, if you want to be notified, hit the notification bell and you will get notified every single day. I trade 90 minutes before the market opens in pre-market. I trade for the first hour of the open market, and like today, and like yesterday, I do trade the closing hour, or power hour as it's affectionately known on the stock exchange. So if you want to join me, hit the notification bell. Enjoy the trade recap, and I'll speak to you soon. Good evening, guys. It might be afternoon where you are, or it may be morning when you're watching this, but it's evening where I am. It's Thursday, the 2nd of June, and the times now is where I am. It's 20 past 9 in the evening. So, good evening. And we took 5 trades today. We traded 5 stocks today, and 3 were profitable for us. 2 not so much, even though at one point during the day, every one of the trades was profitable at some stage. We just gave a little bit back on some of them, and we gained on others. The first trade that we took was Repair Therapeutics. Now, trading under the ticker RPTX. Repair Therapeutics was moving up on news of a collaboration with Roche. So it was reasonably good news. We started to move up. We had a first pullback here at 8 o'clock. Of course, we got the 8 o'clock scrum, so to speak, where you get all the algorithmic trading and the noise that causes these excessive spikes. And we got this extension bar moving up, then the pullback. So a classic bull flag setup. This was our first trade. Classic bull flag setup. We had the doji. Again, the doji is usually a reversal indicator. So the pullback, we get the reversal. So we look for the next candle to make a new high, which was this candle here. So we entered at 11.27 and we took 5,000 shares, but we didn't really move very far. So it didn't follow through. It's low volume pre-market. So sometimes you don't get the breakouts. You're more prone to fake outs because of the low volume in pre-market than you would be with the higher volume in the open market. So that move went in the opposite direction, and we exited for, we actually gave it a 20 cent move. So we exited that down at kind of 11.05, 11.06. Actually 11.05 we got filled. We exited that position. The next one was just a little bit later, a couple of minutes later. We looked for another move. So on this time, we got that move. So we entered on the next candle to make a move up, and we added to our position on the way up, and we took profits a little bit later up here. So it came all the way back down. We were consolidating. We were just holding the position. and it came all the way back down before moving back up, and we took profits at 11.33. We added back as it broke the VWAP. So we got this again, dojis, pre-market. We're getting a lot of this. So as it broke back up above the VWAP, we added back. It did pull back a little bit, but again, we held through this. We were looking at where the resistance was. We were getting exponential moving averages. We had the VWAP. We had the whole dollar. We had this level of 1093 that it had touched a number of times. So we were seeing that confluence of various supporting factors meant that I wasn't worried about holding this a little bit longer till we actually got to where we actually wanted it to where we wanted it to be. So we did take profits. We took profits at the move up on this candle here, and we pretty much got the high of the candle. And then when it started to move back, we got out of the position there. So a good start, kind of pre-market. We did get the move down to the 200 EMA before it then moved back up. You tend to get that with the open. There's occasionally you'll get what's known as a dip and rip. I like the gap and go, which is another terminology, but they can be interchangeable. We get the move into the open. Sometimes it will take a little bit of a dip. Profit takers or people going short on a position that's gapping, or a stock that's gapping up significantly pre-market, thinking that it's going to sell off at the open. So we get a couple of candles forming that opening range, if you will, and then we got the rip. So we had the dip, and then we got the rip. And this is not uncommon. Now, this candle here does say that it went up to 1190, but it only threw a wick up there. If I'm being completely transparent about this, it didn't go up to 1190. It threw a wick up that high because there was some market makers cleared the books with some orders up there, but the price action never actually went up there. And we took some profits on the way up. Was kind of just for the break of 1150. Then it started to come back down, and we added to the position on the way up on this candle here, and then we took profits at 1150. On the way back down, we exited for break even, and that was pretty much it. We got, I think it was $1,000 or something at that stage with RPTX. We traded it again a little bit later. We lost some and then made that back. So it was a good start to the day. Then we moved over onto PDSB. PDS Biotechnology was this company. Had a really good catalyst. It was, I'd like to say cancer catalyst, but that sounds wrong for some strange reason. But it was moving up on news of FDA fast track clearance of cancer therapeutic treatment. So that's great news, and you know, I certainly liked I like that news as it moved up. We got into this. We had a little bit of a pullback, so we entered for the break of highs here, and we got another pullback. We could have potentially added to our position, but we took profits up here at just under 440, just under 445, and 443 is where we got filled, and then it came back, and we took the rest off at 439. We started to move back up. We watched this pull back a little bit. Then when it started to move back up, when it made this candle made a new high, so it beat the high of the previous candle. We re-entered the position. We watched it go all the way up to 455 before it was rejected, and we took profits on the way back down. We took profits at 447 and 450. So 450 to start off with on the $0.50, and then 447 as we kind of broke lows after this doji. Dojis for me are, usually exit signs depending on which way I am, or there could be entry signals if I'm waiting for an entry and the doji is to the downside. They usually assign a reversal. So I looked at this and I thought, okay, next candle to break lows, I'm going to get out. So I actually exited that position. It broke low and then it came back up, and that's where we got filled a little bit higher than the low of the doji. But still exited the position anyway. So we continued to trade this this particular stock for a little while. We got this huge pullback, if you will, all the way down to the VWAP. And then the next candle to break a new high after hitting the VWAP, so a classic VWAP bounce, was this one. And we entered on this one and rolled this up, and we were able to take a little bit of profit. We then added to our position here for 440, and we were watching this for a while, and then it started to pull back into the open, and we were holding this position at the open. I wasn't minding holding this position at the open. I was thinking with the catalyst that it had, I liked the catalyst. The market usually reacts well to cancer treatments and other good news catalysts like that. So I expected it to move up, and I was looking for the break of the $0.50 on the move up. It didn't. It moved up, but didn't move up the level that I wanted it to. So I gave it a little bit of room, and then when it finally broke lows, we had the opening candle low, which I looked at as support, and then when it finally broke below that, that's when I exited, and that's kind of where we finished with that. So we lost money on that trade. We made some money to start off with, and we just effectively gave it back. So we were green on the trade, green on the day on that trade, $75. Any green trade's a good trade. But kind of kicking myself a little bit that I didn't take profits. Because we're coming so close to the open, and I was expecting potentially a gap and go with this particular stock, I held it when I should have probably, not probably, I should have taken profits up here at 445s and then re-entered if it did break these highs. Hindsight's a wonderful thing. It really is. Then we moved on to IMMX. So IMMX Biopharma is the company. They trade under the ticker of IMMX. I didn't see a particular catalyst for this one moving up, but it was moving up quite substantially pre-market, and it was up at 40% pre-market. So it was a big gapper and one of the leading gappers on the day. And we looked at where we could take a trade with this. We saw that the move up, this opening range high, it moved up higher, pulled back to the VWAP. So we looked at, okay, first candle to make a new high. We missed kind of small breakout here, but not quite. Then a bit of a pullback before then starting to make a new high. So that's when we entered. It broke above 270. We were looking for the $0.75 for our first profit target before then moving up. So we were looking for 275 at this stage. It did pull back. Didn't pull back all the way to the VWAP. I was thinking the VWAP 260 was going to be my cutoff point. So again, just giving it 10 cents on the move. So we entered at 270, and I thought, okay, it's not quite pulled back. We're getting a little bit of support here at 262. So as it moved back up, as it reached 270, I added to the position. 268, sorry, not 270. I added to the position. We got in at 268. We added 268. We're in at 10,000 shares here at this point, and then it pulled back, and it pulled back quite hard. I was looking for a bounce on the VWAP. In hindsight, I should have just cut at 262, 261 when it broke this area of support here, but I wasn't quick enough, and we ended up cutting our position at 258. So 10 cents from where our entry point. We were 10,000 shares. We finished that with a $1,000 loss. So not ideal, but Not all patterns are 100%. This break upwards never had the follow through. The move back up didn't have the follow through. So it kind of, if you break it down, you could. There's an argument to say that's a double top, and it's a bearish pattern. You should have just never added the 268, which it's a fair comment in hindsight. But like I say, hindsight is 20/20 vision. So the next trade we took was a company called IMMX Inc. And this had sold off hard. And I mean hard. It was sold off really hard pre-market. And normally it's something that maybe I would have looked at short because it was selling off based on very poor clinical trial results or test results. And as a result, it gapped down quite heavily. But at the open, it tried to have a bounce. It tried to make that move up, and that's what we jumped on. So we got a tip from one of the traders in the chat room. This was moving up, so we looked at it, and as it kind of crossed the 200 EMA on this level. So I thought, okay, interesting. Let's look at the next area we can actually get in for a trade. So we got a pullback, a bit of consolidation, bit of a fake out here on this doji. I wasn't quite convinced. And then when it did start to move up, we got in here. It did make a little bit of a pullback. So a little bit, we anticipated it a little bit, but as we broke up the new highs here, we decided to enter the position. It didn't fake us out. We did take quite a big size. We took 5,000 shares to start off with, and we rolled it up, and we took it all the way up here. We added another 5,000 shares and took that back. So that was effectively locking in the profits, taking half of the profits, bringing the average cost up by half, and then we rode it all the way up. We put a stop loss here at 360, which was the low of one of these candles when we did that. So we put the stop loss in at 360, and we were ready to continue riding this up towards $4 and the break of $4. We got a heavy flush. It flushed all the way past 360, which was a little over, I think our average cost at that stage was about 358. So 360 was, in my opinion, a safe stop to have. It was a little over break even, but it flushed straight past the stop, and we got a lot of slippage. We ended up losing a little bit of money on that. We were up quite considerably to start off with. We were up over $2,000, and we lost pretty much most of that straight away. And then we looked for a bounce. We looked for a bit of a dead cat, if you will. And we didn't quite get that. So we looked for the dead cat here. We got a couple of dojis, and then we entered for this candle to make a new high, and it went against us because we went 10,000 shares. We went a little bit bigger, and it went against us. So we got in here at 352, and we got out 340 on the way back down again. So that pretty much wiped out our profits on IMMX. We finished the day a little bit red, $150 down. So, not the greatest trade, but it just goes to show you can put your stop loss in place, and if the move's too quick, it's still, you're going to get slippage. So just be careful with that, guys. Managing your risk is one thing, but sometimes even if you're putting stop losses in place and trying to manage your risk, the markets flush right past, and you still don't get the right fills. So that's another element of risk that you've got to keep in mind and mitigate where possible. We traded next Redbox. Redbox making a move up on the day, and it's been a social media darling. The Wall Street Bets forums and Reddit forums looking at this is a potential short squeeze play. I looked on the key data in Benzinga. The key data was that it was about 32% shorted, so it is highly shorted. So if it makes a significant move up, we're going to get shorts to cover, which have that snowball knock-on effect. So there is a potential for a short squeeze here. Now, we started trading this a little after 10:30, and we got in here. We looked for a pullback. As it was moving up, we looked for a pullback. We got a micro pullback, and we entered for the move up. It did pull back a little bit, and it came down to what was the 9 EMA, and bounced quite nicely on the 9 EMA. It moved back up, came back down to the 9 EMA, and it was exhibiting that kind of adherence to the 9 EMA. So as it moved back up again, we took some profits up here. At what price did we take profits? We took some profits at 7.17, and then on the way back down at 7.50. We did get back in at 7.18 a little bit later. And we exited at 7.20. So a couple of cents on that one. Not a big. So it went up and then down. So then a little bit later, we got this flush. We weren't in at this stage. And then we got the bounce, and we entered for this candle to make a new high. And we got in, it was 6.95, and we rolled that up to 707. So good trade. We made some profit. It got a bit choppy at that stage. Then it came all the way back down to kind of 6.92, 6.93, and we got in another trade. This time for the break of $7, and we rolled that up to 7.20. That's when I kind of finished for the day. I took the dog for a walk. We were like 2,500 up on the day at this stage. We were about we were 3,000 up with Redbox, and that put us 2,500 up on the day in terms of trade profit. We didn't trade anything else until we came back. We started the live stream later in the day for the final hour of the market, so power hour, if you will. And we came back for power hour, and we traded RPTX again. So I mentioned earlier that we took a couple of trades, went against us to start off with, and then came good at the end. So RPTX, our first trade was at just over 3 p.m. So we'd start the stream just before 3 p.m. We had this little bit of a pullback, and then on the move up, it's a couple more red candles. And we entered here, which was RPTX at 1270. So we entered at 1270. It pulled back, and we gave it 15 cents. We gave it, and we got out at fill was only 2,500 shares, but 12.54. So we kind of lost a little bit of money on that. We were already up at this stage on RPTX, but we lost a little bit of money. That left us at about $400 on RPTX. We're still up on the day. We're still good. Still green on the day. And then our next position was on the way up. We got this double bottom formation, if you were, very loose double bottom formation, but it was strong enough for me to take a position on the way up. We got this move up. I was a little bit late to take a position, so I took a position on this candle here as we broke. I was looking to take a position for the break of 270, which was essentially the high of this level. So if we're looking at the W here, it was the equivalent resistance level. So we broke the 270. That's where I actually took the position. It was 1271, and then we gave it 10 cents before we took our first profit, took half the position off. I'd taken a 5,000 share position at 1271. We moved up to 1280, took 2,500 shares off, and then we rolled this up, and we took we added to our position at 1315. So this was up here on this candle here, this small pullback. We got the pullback as it then started to make a move back up. We added to our position at 1315, so we back in with 5,000 shares. That's when we moved up, and as it came back down, we got out on the first candle to make a new high. We've got a number of exit indicators here on this one. So we got the topping tail, exit indicator number 1. We got the doji, reversal sign, exit indicator number 2. And then we got the first candle to break a new low. So that's when I exited. It did make a move back up, and back up to kind of 1344, 1345, which was the highs. And then it moved back down again. Now we've got the devil horns as well. So we've got a number of exit indicators. I was already out at this stage. I'd heeded the first 2, or even the first 3. This is exit indicator number 4 before we get a big flush down, and it went down to almost $13. So pay heed to these exit indicators. It did make a move back up later. We didn't take any further positions on this. We were good with RPTX at this stage, and we did take one more trade with Redbox, which I'll come to in a second, and we were good with this one. We made back what we'd lost and a bit beside. So Redbox. So we looked at Redbox, and I'm going to zoom out for this so that you can see what I was looking at. And we decided to take a position with Redbox. We finished this trade. We didn't make any money on it. We made the 3,000, just over 3,000 on Redbox. But we decided to take a trade towards the back end of Power Hour, the back end of the open session, and we ended up exiting for a scratch trade. It was a break-even trade because we were running out of time. However, we saw the reason for the trade was we saw this huge pattern formation, which was essentially, if you don't see it yourself, a cup and handle on the 1 minute. If you look at it on the 2 minute, it was confirmed again, cup and handle on the 2 minute as well. So we saw this, and we kind of looked at this as it pulled back. We thought, okay, this looks like it's going to be a cup and handle formation. So we entered on the move up. We entered out for 660 on the move up, and it pulled back a little bit. I figured give it a little bit of space, move back up again. It went up to as far as 668, and then came back down to 660. That's when I exited here because we were very close to the market close, and I didn't want to hold this into the close. We just ran out of room. And I'm a firm believer that if we'd had another 10 minutes of the market left, that we would have seen this move up, and we would have. The reason I like to trade the cup and handle is it not only does it have a very good measuring stick of what your take profit should be, what your profit target should be. So the depth of this cup, which was essentially good 30 cents, 30 to 35 cents, the depth of the cup. But you've also got a very tight stop, a very tight risk that you can put. So you put your stop loss at the bottom of this handle. You got the cup, the depth of the cup is what you're looking for again on the move back up. You put your stop loss at the bottom of the handle. So effectively I was risking 5 cents to make 30. Very good risk reward. Effectively 6-to-1 risk reward ratio there. It didn't break out. We could have still potentially taken a little bit of profit, could have taken 8 cents on this, but I was looking for the bigger move. And we didn't get that bigger move because we just ran out of time. But the cup and handle is a very good pattern to trade because of that, measuring stick that you've got and the very tight risk that you're trading with. So that was the end of the day. That's how we finished. 4,000 up on the day, a good green day, 7th green day in a row. We've put a streak together. I'm feeling good about June already. We've made over $7,000 in trade profit in 2 days. So if we keep this up, not only will we have a good June, we're growing the account so that we can actually be able to scale up and increase our gains throughout the month. And that's the aim, that we want to be getting back to towards those, 5-figure gain days. And today we had enough volatility. Overall, the markets were green. Overall, the markets were, considerably green, almost 3% on the Nasdaq, 2.5% on the Russell index. The S&P 500 was 2% up as well. So it was a good green day across the board. And when we're trending upwards like that, it becomes a lot easier for stocks that make a rally to hold the gains, which makes it easier to trade and make profits if you are a long bias trader. So yeah, a good green day. Happy with the gains. Happy to take away another $4,000, less transaction fees, of course. And we'll be back at it tomorrow. So remember to come join us tomorrow. And we'll be trading from 8 a.m. East Coast, which is 1 p.m. in the afternoon, where I'm based in Dublin, Ireland. But that's 8 a.m. East Coast, 90 minutes before the market opens. And of course, we'll trade the first hour of the market open as well. So come along, watch us trade live. And we talk about how to trade. We talk about what to trade, trade ideas, everything that you need to learn about day trading the stock market. I look forward to seeing you there. Have a good evening.